What's up, guys? Welcome back to another video. Today is going to be my first YouTube video. Actually, no, I did make two other videos a long time ago, but this is going to be my first trading analysis video, a trade breakdown of my biggest trade so far on a funded account, okay? This was a trade that profited me 5%. As you guys know, I have a 300K funded account. So this trade profited $15,000 in one single trade. Absolutely insane. It was playing out super well. Honestly, I think the biggest thing that was holding me back while holding this trade was my emotion. Now looking back at it, it was really difficult to keep my emotions in check, and it's just always a constant reminder that psychology is winning. It is the winning factor in trading, right? So basically in this video, I'm going to break down every single aspect of the trade in full detail and just show you guys my exact entry and everything that went with it, how I added to the position, where I put my stop loss, etc. So let's just jump into the chart. Let me show you what I did, and hopefully you guys can learn a couple things from it. All right, guys, so we're here in the charts, and I'm just going to do a quick overview, right? So this is the trade that happened in its entirety from the start to the end. You can see where my entry was and where my exit was. So I want to bring this back all the way into the higher time frames and then break it down slowly and go really into detail for each one. So let's start on the weekly time frame, right? And let me go into replay mode as well, just to kind of understand where market structure was at the time. So here on the weekly time frame, right, we can see very strong bullish moves. We can see that it's creating higher highs, higher lows, higher highs, higher lows, and then additionally another higher high. We coming back or creating another higher low. If you do have some discrepancy saying, oh, will it close below these lows, so maybe the weekly is bearish, technically you could be right? I was way more interested that this was going to continue bullish from reading price action on the weekly time frame from this candle right here. This singular candle is a huge confluence that this was going to continue bullish. We are creating, again, like I said, higher highs, higher lows, and this candle is a bullish rejection candle, rejecting all of the lower prices, and it's holding at this area of interest. It's holding at these support and resistance points on the area of interest, right? Not only that, it's also holding above this weekly EMA as well. Just very high confluences from the weekly time frame alone, just reading it alone. Even if you just wanted to trade just the weekly time frame, so you didn't look at anything else, I feel like there is a very high confluence that you could just be like, okay, yeah, this is creating simple market structure to continue upwards. Like, if you didn't want to look at anything else, you could sure put a fucking buy limit right here and, push your luck and hopefully make something good if you didn't want to look at anything else. But it just looks very clean for very strong bullish market structure to continue to be created. So that's for the weekly, right? Weekly we have bullish. So let's drop down one more time frame into the daily time frame. And here we can see that it was heavy bearish at the time before I was placing the trade. So it was continuing bullish, breaks heavy below, creating these lower lows, lower highs, creating bearish market structure. And then this singular candle breaks above, creating bullish market structure on the daily time frame. And the reason why this is very crucial, especially this candlestick, this bullish blue candlestick, is because that it held above the area of interest. It didn't just shift of structure the daily into bullish market structure. It held, broke above the highs, and closed above our area of interest that we had drawn out, which is crucial, right? We want to buy when we are above the area of interest. We do not want to look for buy positions when we are below the area of interest. So it's very important that we keep that in mind while we're trading, making sure that we are not breaking our trading plan and making sure that we're buying when we're above and selling if we're below, right? So that one bullish blue daily candlestick was very, very important to see. Very important since it closed above the area of interest. So now that we have the weekly is bullish, daily is bullish, let's head down to the 4-hour time frame. 4-hour time frame, we can see that it was turning bullish as well. You could even see also a reverse head and shoulders pattern pretty clear there as well, right? We have the left shoulder, the head, the right shoulder, and boom, we break above, coming back, retesting now this neckline of the reverse head and shoulders, right? So very clean market structure being created on the 4-hour time frame. Lots of great confluences are adding up. Our EMA is lining up very, very well. Our 4-hour EMA lined up almost perfectly with our market structure. It was bearish, it was coming low. We broke above our EMA, we broke above our area of interest. So 4-hour is breaking above these highs. 4-hour turned bullish, right? So now we have our weekly bullish, daily is bullish, and now 4-hour is bullish, all holding above our area of interest. So very strong confluences there. And now we can start to see somewhat of a rejection on the 4-hour time frame at this area of interest and also at our EMA. So let me move it another step forward. This was in the beginning of the week. We can see it's starting to push upwards on the 4-hour time frame. Let me go down to the 1-hour. And this is where the first Fibonacci sequence comes into play where I placed it, right? So we can see here this pink one. I'll redraw it for you guys just so it's a little bit simpler. We go from the bottom of the push all the way up to the top of the push when we draw our Fib sequences, right? It's up to you, honestly, if you want to use either the highest wick of the bullish candle or the highest wick of the bearish candle at the top of two. So let me explain, right? So guaranteed, we know that this is going to be the bottom of our Fib sequence, right at the bottom of this blue bullish candle, since that's where the push originally started, right? And then I put mine at the top of this wick here, right at this point. But, you know, if you want to put it at the top of this wick here, I wouldn't disagree with you either. They're very, very similar. The main thing that we're looking at, though, is trying to keep our 0.5 and 0.6 zones in a very similar area, right? So if I put my Fibonacci sequence here or here, it doesn't make that much of a difference, mainly because it's still in the same area. You're giving or take, you know, 2 or 3 pips at a time. It's not a big deal whether you're moving it that big of a difference, right? So that's how I had my Fibonacci sequence set up. I had it up at this bullish wick, showing that we are waiting now for a retracement on the 1-hour time frame. I guess I could also explain that, right? So we have our daily, or our weekly, our daily, and our 4-hour is bullish. And the next step is waiting for the shift of structure, right? The shift of structure is very important on the lower time frame in order to continue this structure, continue this market bullish. So we were bearish, we pushed up bullish, bearish. This is where our shift of structure came into play. These 3 blue bullish candlesticks, that's where we got our shift of structure, right? This is our shift of structure that happened. And now after the shift of structure happens, that's when we start to wait for the retracement. So it was right within this 1 hour that I started to see the red candle. This next 1 hour red, candle was red as well, bearish. I was telling myself at the time, okay, now we're going to start seeing the retracement. This is where I need to start looking for my entry position and where I want to put my buy limit. As you guys know, in the Alex G strategy, he uses the engulfing candle as his entry in order to trade. And I trade a little bit differently. I used to trade like that, but I kind of was a little bit more comfortable with the way that I trade now, where I like to use buy limits and sell limits for my execution of the trades. So basically, I said, where can I enter on this trade that's going to give me high confluence for it to continue bullish? And the zone that I chose specifically was this zone right here, right? The 0.5 to the 0.618 zone is a super strong area for Fibonacci retracement entries. This is the golden zone when it comes to entries. You will see this happen thousands and thousands of times over and over again on every single time frame. You will see a push, and then the retracement will always go back to either the 0.5 or the 0.618 zone. It'll tap it, it'll enter it a little bit, it'll consolidate in that area before continuing upwards. Is it guaranteed? No, obviously, right? No indicator is guaranteed. No Fibonacci sequence is guaranteed. No strategy is guaranteed. This is just a very high probability that we're going to see a retracement into this area and then push bullish and push back up into where we want it to go, right? So that is the zone that I was looking into very specifically. Not only that, we also have a lot of demand zones that were in this area. Now, I like to use demand, supply and demand, as kind of an entry confluence for where I'm going to put my buy limit and sell limit. So if I go to, I believe, the 4-hour time frame, we can see that the 4-hour demand would be the top of this wick here. We drop one more, 2-hour demand would be right here. The 1-hour demand will be right here. 30-minute demand is a little bit lower all the way down here. So overall, we have 1, 2, 3, 4 areas that are very, very strong, very close to each other when it comes into the supply and demand kind of area of trading. So I didn't really look at the 30-minute. I was more interested in the 1-hour, 2-hour, 4-hour. Those demand zones were lining up very, very well, and I was very interested in that. So I basically said, I'm going to put my entry right at this demand zone, right on the 1 hour. I think the 1 hour is a great time frame. You can see so much information on the 1 hour time frame. So I told myself I'm going to put my entry here, right where this purple mark is, at the 1 hour time frame. Now, I'm not going to lie, I'm a little bit of an idiot, okay? This is where my entry was supposed to be, and I typed in the buy limit incorrectly. Okay, so I typed the buy limit incorrectly, which was, very, very idiotic of me, and I'm very upset that I did, but you know what? I'm glad it wasn't that big of an error. So in actuality, this is where my entry was, right? Right where the main, the bigger, profit and loss areas are. This is where my entry was initially. And I even traded this on my other challenge account because I'm trying to get another challenge account. So on my other challenge account, I typed it in correctly, and I can show you guys if you want. I could put it on Instagram, but my entry for that one was right here. So I should have entered it properly on the live account for the position, but I was just being a little idiot. So that's my bad. I need to really focus on my entries. I guess make sure I type in the numbers correctly when I am going to enter in a position. But either way, the entry was still decent, right? So we can just see how accurate it was, right? Price came all the way down and perfectly, and I mean perfectly, wicked into the 1 hour demand. Look at this rejection. Look at this. Look how accurate this is, guys. This is insane. Came down, touched our demand zone, and within a single pip, it rejected back up. This is how you place an entry, right? This is why I kind of transitioned away from the engulfing that Alex uses. I think it's great to use the engulfing, but sometimes I just felt like I was missing a couple things. So I started using this as an entry instead. But look how accurate it was. This was a pin perfect accurate entry position. So that's where my entry position was, right? And I decided, where am I going to put my stop loss? My stop loss is going to be obviously below these recent lows. I didn't really take into account this blue wick as much, this blue candle, simply because this is just, you have gaps in between candles, and I would rather have like maybe a little bit tighter stop loss, keeping it below these main lows and this consolidation that we had here. So that's why I kept my stop loss somewhere around here. There's no exact price reason why I put it here. Like it had to be 0.90192. There was no exact reason for why it had to be that exact number. It was just within this zone, right? I was just like, okay, I'll put it here. This is good. Because I wanted it to be within that area. So that's why I had my stop loss there. Now, basically, we're continuing on the trade, right? We can see we had a pin perfect accurate entry. Love these entries. They're so nice to see. We start heading into the bullish direction. Really strong pushes. Really great to see that stuff. Even if you, let's take a step back, right? Even if you were trading Alex G strat hand tree position, this is where you're going to enter right here, right? This is where his engulfing candle is. If you want your stop loss at the same area, then it's the same thing, right? You're still going to have a good trade whether you use his entry position or my entry position. Just both very validated, very strong. So we're continuing bullish here. Right now we can see a very much cleaner market structure on the 1 hour, right? We created this reverse head and shoulders on the 1 hour. We broke above bullish. We're coming back. We're retesting our market structure. We wicked into our entry right on the demand zones for 3 or 4 different time frames. We're pushing off against our 1 hour EMA, our 4 hour EMA, looking very strong. Now we're pushing above our area of interest. This is exactly how we wanted our play to work out, right? Now we're making very clean bullish market structure. And this is the point where psychology comes into play, and it's the most difficult thing in the world. It's time to set and forget, right? This is the bread and butter of trading, right? And Alex has really pinpointed it, and he's built an amazing brand off of his set and forget strategy, and it's truly incredible how important it is, because after you have a winning trade, you look back and you say, wow, like the hardest part was just holding through, right? Going 2-3 days in a row, trying to, not pay too much attention to the charts because you want to stay in it. You want to take as much profits as you can. You don't want to feel this anxiety going back and forth, looking at it. Oh, you're at work or you're at the gym and you got to look at it every 2 minutes. Like, the hardest part is just to set and forget. And it's really true. It's like, it's the psychology is just the really hardest part. So we're continuing bullish, right? And at this point, I'm looking at the chart, right? I've looked at this chart now maybe like 4 or 5 times within 3 hours. I'm like, oh, it's consolidating. It's at these tops. Should I close? It might reverse on me. I don't know what to do. It's creating some type of bull flag. It's gonna go bearish. I'm gonna hit my stop loss. Like, I'm freaking out, right? Like, psychology is so hard to deal with, but it is what it is. Just hold through it. Don't force yourself. And we continue all the way bullish. Here is the next part where I started to consider an entry position again, to kind of build on my position, add a little bit more meat so I can gain a little bit more profits, right? So you can see if I delete, I'll just get rid of this just so it's a little bit clearer for you guys. I drew another Fibonacci sequence, right? Again, from the bottom of the push all the way up to the top. Like I just said before, give or take, if you wanted to use the bottom of this wick, or if you wanted to use the bottom of this wick, it's the same shit. It's the same thing. You're talking about a 1 to 2 pip difference. Like come on, guys. Like, if this is the zone that I'm interested in whenever I'm using the Fibonacci sequence, right? Now, if I move that here, how big of a difference is this? You're talking about like some minute difference in like, it just doesn't matter, right? So just, draw your Fibonacci sequence from the bottom of the push to the top of the push. That's important. That's what we want to see, right? So either way, this is how I drew my Fibonacci sequence. Maybe I should have drawn it here instead. That probably would have been a better one, but like I just said, it doesn't really matter when it's this small of a change, right? You're talking about a 1 to 2 pip difference. Doesn't matter. So this is where I start to consider a second entry position, right? We'll continue down. I saw it was retracing. I wanted it to hit the 0.618 zone. So it's going bearish a little bit. That's fine. It's retracing. This is the hardest part. Let me talk a little bit about this too, right? You see your trade go all the way from your entry all the way up to this point, right? You are 33 pips in profit, right? You see on your screen, you're up $9,000, $8,000. And then within 3 hours, this John tanks, right? You see it creating bullish market structure and you see it go down this heavy. This is the part where psychology kills you, because you're looking at this and you're like, oh my gosh, I should have closed at the top. I should have closed it. Why didn't I hold? Why didn't I sell? I saw it. I should have just gotten out and keep my money. This is the part where psychology is hard. This is where set and forget really impacts you the most, right? If you just truly set and forget, this is how you make more profits, right? So I knew I had to set and forget. I knew I have to continue to hold, right? My stop loss was still set here. I didn't move it to the break even. We're not doing any of that for now. I only move my stop loss to break even if there's like a massive news event. And I know that the next wick that's going to be made is like something like this or like this. So that's when I'll move my stop loss to break even. But we didn't have any news that was mattered too much to us for this. So I'm continuing to hold. Price is continuing to develop. On the lower time frame, we're starting to see some market structure, right? And then now we start to see rejection, right? This rejection wick right here was my second confluence that we are going to continue upwards, right? This 1 hour, we have a bullish, I believe it's called a bullish hammer candle, something like that, right? We are wicking below all these lows. We pull back very strongly in the bullish direction. And it's just a very nice confluence to see. And we could even see how accurate it is wiping out this demand zone, right? It basically wiped out the 1 hour demand zone again, almost by a single pip, right? This is how accurate it is when it comes to supply and demand on these lower time frames. Super, super accurate, especially from the 30-minute, 1 hour, 2 hour. If those 3 or 4 time frames are in sync with the demand sticks, bro, that the entry is going to be pinpoint accurate, right? So very, very nice to see that rejection wick. And then right on this push, there was no super specific thing. It was mainly this 30-minute engulfing candle that I wanted to get in next, right? So it continued bullish, it closed bullish, and I waited for just a couple minutes for it to pull back a little bit, because I know every candlestick is going to have an upper and lower wick. So I just waited like a couple minutes for the retracement, and then boom, I manually entered into this trade. And then that's it. Set and forget at this point, right? That's the rest of the trade. You're just continuing bullish, bullish, bullish. Even at this point, my psychology is saying to myself, oh, I shouldn't have entered a small position. I should have just closed when I was above. Like, what am I doing? Now it's holding up this resistance. Now we have a rejection wick at the top. I'm gonna lose all my money. Like, psychology sucks, bro. Like, sometimes it makes you think, I just want to be a robot so I can just click buy and sell and just call it a day. But you want to be into it. You want to understand what's going on and what's happening if you're making money or losing money. So it's natural human instinct, but it's like sometimes it just kills you, But set and forget, bro. You just have to set and forget the strategy, and you will see the amazing profits it brings, right? And then boom, I wake up on Tuesday morning. I see I'm very heavy into the profit. I see we're pushing very, very strong. And I said, let me get out at this point, right? Now I'm up. I'm at a comfortable level. This is a 5% gain trade, right? 5% is a lot for one trade. So it's a lot. My main big position had a risk to reward of 2.2. My smaller position had a risk to reward of 2.37. Right? That's a big, big trade. If anybody's wondering, oh, how much did you trade initially? I have a 300K account size. I was risking 1.5% on my big position and then 0.75% on my smaller position. So 1.5% times our 2.2 risk to reward ratio was about 3.3-ish. And then my 0.75 times 2.37, that gives you about 1.75, something like that. So in total, it gave me just a hair above 5% profit. So that's kind of where I decided to take my exit. I was like, all right, this is enough for me. I see a very strong push upwards. Do I really think it's going to continue? We're at these tops, and I was already stressing a lot too, so I could have maybe held a little longer. But I was like, no, I'm going to close my position here, take my 15 grand profit, and run with it. So You know, this is not a home run trade, right, guys? This is not some 1 to, 12 risk to reward ratio. I flipped my account tenfold. I turned, $1,000 into 15,000. That's not this, right? This is kind of a more normal trade. This is something that you want to see consistently. This is a type of trade that you want to repeat every other week. And if you can, this is where your most profits are going to be, if by repeating this process. It's just like I said before, the psychology is what kills you, right? I truly think 90% of the trading is psychology, because my analysis takes 15 minutes to do on a weekend, right? It takes me 15 minutes to run through all the charts that I have, and pick and choose which ones I think are going to be strong for this week or next week, whatever the case is. So it really is not that hard to do the technical analysis. It's just about when you're in the position, do you have the mental capacity to really hold the trade out longer or as long as you needed to? That's the difficult part. And that's where the set and forget strategy truly comes into play. It's super important. But either way, that's where I took my profits. I really liked that 5% number. I was like, 5% is a huge gain on the account. Let me take my profits and call it a day, call it a week. Honestly, I don't think I traded for the rest of this week for this. So very, very important that we take into account where our position ends up being and if we're comfortable with taking that win, right? Because like I said before, I'm not shooting for the big wins. You do not want to chase bigger wins. You need to be chasing bigger capital, right? If you can make 1% a week, right? Over a course of a year, that's 54%, whatever it is, right? That's a lot of money that you can make. But if you're trying to make 12% in a week, every single week, that's not happening. That's just never going to happen. If that does happen, you should be writing books, because you're going to be the greatest trader of all time that ever existed in any history of the entire world. That's just not going to happen, right? That's highly unrealistic. But shooting for 1% gain every single week, 0.5% gain every single week, and just focusing on growing your account size, gaining more capital through funded accounts or whatever it may be, that's where you'll start seeing a lot more profits, a lot more profitability, and also just help your psychology a little better, stay a little bit more consistent. So that's basically it for this video, guys. I really hope you appreciated it. I hope I went into enough detail for you guys to understand where my entry was, how I did my analysis on the charts, how I used the EMA, how I looked for shift of structure. Those are the real key points, right? Those are the bread and butter of trading when it comes to trading support and resistance, and also the set and forget strategy from Alex. So very important, and I hope you guys learned a couple things. So hope you guys have a good luck week trading. Don't forget to set and forget and keep control of your psychology, because that's what's going to make you profitable, right? I hope you guys have a good one. I'll see you guys in the next video. Peace.